Hi and welcome to the Market Alert for Friday, the 30th of September 2022. So this headline sums up yesterday really, and it's gone. All of Wednesday's gains, when we saw the Bank of England come out and print 65 billion to support the gilt market, had disappeared. It was all completely erased. And other headlines: stock slide, ugly mood returns as traders asked, did anything change? No. And I mentioned that yesterday, and I'm going to mention it again when we get to the pound. Stocks and dollar tumble into month end while German CPI ignites EZ Eurozone inflation fears. So hot German CPI yesterday, so they're still not learning. Mind you, the Eurozone is so far behind with raising rates, it's no surprise. Gold-silver ratio is still in the 88 level there, you can see that there. And economic news, what have we got? GBP current account will be interesting, 7 a.m. And final GDP as well, which is quarter on quarter, which has gone negative. House price index as well, that's out, forecasting an increase in house prices still, but that's going to lag what happened on Wednesday. Revised business inventories, and then we're off to the Eurozone. I'm just looking for anything sort of major. 130 core prices will be very interesting, and we got a bit of flash news there from the Eurozone as well. Who else have we got out today? FOMC, Brainard is speaking. Usually puts foot in it, and revised UOM. So there's a lot of news out. There's still another couple of Fed members there as well. It's been a week of talking the markets up, or trying to talk the markets up. But as we look at the Dow, you can see that wasn't the case yesterday. The market reversing on Wednesday's, or off Wednesday's gains. As we saw yesterday morning, it was struggling. It didn't even trade up to the high when the DAX opened. As you can see here, we never got anywhere near the high of the previous day. This was when we looked at the markets yesterday morning. In the Dow, we got as far as the 20 bar moving average, managed to rally back up to that, and then we fell out of bed at 2 p.m, 2:30, and that's the way it continued, doing a double bottom, or just over a double bottom, before bouncing. And weakness overnight, but we're making an attempt to come back today. We are due for a bounce in this market, that's for sure. It's seriously sold off, as we can see from the daily chart there. But we might just get a small bounce as we did here, and then a resumption back down as well, which we saw back in September, early part of September. In the German DAX, also straight reversal on yesterday, trading down to the previous day's low, and overnight market is still weakish, as we can see there. And from the kickoff, we didn't get to the high, which I was hoping. I was hoping we were going to get a cash rally up to the high and then sell off. It didn't stop me getting short on the move to the downside from the open. As I was trading what I was seeing, I was just hoping it would get to the high and it would run out of steam, but that didn't happen. Like I say, you've got to trade what you see, not what you want to see. Market then sold off to the DP, found a bit of support for an hour, then came in the second wave of selling down to the S1, and the market just sat in this area, as you can see there, and then a bit of a move to the downside with the Dow, and then a retracement, and then made its way back up to the 50 EMA overnight, and has retraced 89%, if not a bit more there, which you can see. We've got the market coming up and then just retracing. It's more or less a double bottom. I got demand coming in there, and we're just moving up with the Dow futures at the moment. But you've got the 20 bar, 50 close, and DP in the way in the 30-minute chart. So yesterday morning we saw the futures selling off. They became sideways, and then when the cash market opened, the market just tanked down 150 points, actually 200 points from the DP. Market traded sideways then for the morning, before we saw another move down in the afternoon, before prices returned and then moved back up. Lots of nice trades yesterday. The volatility is very, very nice at the moment. It just moves, which is what we want to see. But overnight, we've got a bit of support coming into the market at the moment. You're going to have to watch as I just showed you in the 30 minutes, the close, the DP. You've got three of the averages were through. Now we've got the 200 MA there. We'll also have fib retracement there as well in that level area. If I just draw that in from there down to there, you'll see we've got 78.89 with the 200 MA in the 5 minute chart. So watch out for this area as well. Let's have a look at the trades. So let's have a look for the week so far, going back to the 26th on Monday, and we'll just do a quick report. So down here we've got profit factor of 13.53, which is healthy for the week. You can see the market equity moving to the upside nicely, no major losses or drawdowns. We've then got let's have a look here. We've got what am I looking for? Yeah, we've got 79, well it's 70 win-loss for the trades. So all in all, a good week, and actually a good month as well. Let's just have a quick look at the month. We go back to Thursday the 1st. Do that, and then let's just create a quick detailed report and overwrite the other one. For the month, we've got 5,271. We've still got today to go. 5.46 profit factor and 68.32 win-loss ratio there. So a good month for trading this month, and you can see there the profits. Obviously, nice profits there. That was the short when the market turned short again. Nice profits for that period there. So yeah, let's see what happens today as far as the trading is concerned, and then I'll do a run on Monday of reports for the whole of September, and also back to the 19th of September when this account was set up and started to trade. We was at 10,000 to start with. We're balance is 41278 now, so moving in the right direction, but we'll talk more about that on Monday. And in the S&P we see the market moving down as well yesterday, sideways overnight. Again, it's got to the DP and the close in the way from yesterday. For this market, the UK also putting in a straight reversal, but a bit of demand there yesterday, and again price is sideways overnight, but it's looking weakish, isn't it? You know, there's no doubts about that. We sold off from the open, we bounced back 50% to the DP before we became overbought, and then headed back down to the low playing a major part. Wednesday's low, and then the market bouncing off this. We've been to the close, but we've pulled back as well. So at the moment, from a retracement point of view, from there to there, we're sitting back at 78.89 for the FTSE, and we're oversold. So a bit of a bounce in the market wouldn't be a surprise. And in the weekly chart of the FTSE, we're also at the 89% retracement from this major swing there. So the market just below it at the moment. So this low is going to be important as well. If you're a FTSE trader, keep an eye on this level, because this takes you back to March 2022. So just be warned, if we break that, we've got the 6760 area there. And in the currencies, you can see that the JPY has moved strongly to the upside in the daily chart. We've actually traded up to the 200 MA yesterday and just above it on the overnight. Now this market has moved back a lot, as is the pound, which we'll look at in more detail in just a moment. In the 30 minute, you can see yesterday it was just a one-way bet, the market continuing to move to the upside, as the market seems to have calmed a bit and accepted what the Chancellor has done with printing his 65 billion. But let's have a look and see what the pound has actually done from the low back to the high of the overnight. So we've come back 793 pips in the pound. That's a massive move. Not only that, and I'm looking at this for the possibility of another move to the downside here. Let's go to where the sell-off started, and you'll see we're at 89. I've just gone from this point down to here. So we're back to 89 as well. So it'll be interesting to see if the market holds at this level. If it does, then from here to here will give you the 20 bar moving average with the 89. But this is due. It's due for probably a resumption to the downside. It's certainly not over, as the headline said at the beginning. There's no way is this over. So watch this area here. As I say, that's an 89 off there. We've got another 89 that ties in at there as well. You'll have to just use the 30-minute chart to actually time this, or smaller time frame, just to see what's going on. But yeah, it's interesting that this has put on so much in the last few days that is due for a respite and possibly a reversal. It could be a dead cat bounce or a relief rally that the Chancellor printed 65 billion. But we'll see what the dollar does as well during today. And in the metals, silver and gold both holding at the moment, coming off that 1806. Bit of a choppy session. You've got the usual London fix manipulation there, but managing to brush this off and move to yesterday's high on the overnight as well. Gold also moving and making grounds back to the upside as well, coming off the DP. Again, the London fix, but also trading back at yesterday's high as well there. Crude oil up on Thursday and overnight. The market sideways. I don't think that's up to date. That chart doesn't look right. It says it is. Yeah, I'm not sure about that. Somehow we were up yesterday. We should have another bar and another one. Yeah, it's not up to date. For some unknown reason, it's not loaded correctly. Not that it's too much concern, but I know that didn't look right. And the main one that we need to look at, which is right, is the US dollar. And you can see this is pulled back over the last couple of days, but it's going to be a situation where it's likely to make a return and resumption back to the upside as the Fed talk about continuing to increase rates. It's going to be bullish for the dollar, and that's where you'll get the impact on the British pound and the JPY when this occurs. So the dead cat bounce may not last as long as we think, and then we get a resumption back to the downside with the short selling. I don't think it'll be as aggressive as it was before, but who knows? But certainly, I'm not ruling out parity for the pound against the US dollar, as I wasn't ruling out the 114 level when we were miles away from it earlier on in the year. That was the target, and we went through that. Okay, that will do it for this one. We're heading into the weekend, so have a great weekend. Let's see what happens today. It should be calmer, I would have thought, and possibly might have the opportunity for trades on the long side. But like I say, you've got to trade what you see, not what you think. It's just years of experience of looking at charts. You think that, well, we're due for a bit of a bounce and a bit of a breather. But that, of course, is all dependent on geopolitical news remaining on the sidelines as well. Okay, that's it. Have a great weekend. As ever, thanks for watching. See you in the next one.